President Obama moving today to close the loophole that lets foreign companies avoid paying U.S. taxes on profits that stay overseas. Are U.S. multinationals shirking their responsibilities, or would the new taxes be a double tax on profits? Here now, Dan Mitchell, Senior Fellow at the Cato Institute, and Christian Weller, Senior Economist at the Center for American Progress. And we appreciate having both of you here with us. Now, Dan and Christian, what's interesting is when, during the election, everyone was so curious about the French tax policy, and Hank Paulson was talking about how American corporate taxes are so much higher than other developed countries, and it would cause companies to not want to list here. We had these numbers run, and we had them run again. On a federal basis, just federal taxes, not counting state and local, the average corporation in America last year paid about a 21% tax rate. Dan, is that a sign of shirking responsibility or better than you'd think?
I think our corporate taxes are too high. I don't care about the effective tax rate. That's that 21% figure.
Yep.
I care about the marginal tax rate, which is 35%, and I care about that because it's much, much higher than our foreign competitors. And now Obama, with his new proposal, wants to make it even worse for U.S. companies trying to compete around the world. And that's a spectacularly misguided policy that's going to undermine U.S. companies.
Christian, what do you say? And do you agree with Dan that the statutory rate of 35% is not really the thing to compare to the rate they actually pay?
Actually, I disagree. The main thing to think about is not just the effective tax rate, but also what corporations are getting for it. And apparently American corporations seem to like high-tax countries. If you look at where American corporations are doing most of their business, it tends to be the U.S., it tends to be Canada, Germany, France.
Right.
And the reason for that is that companies are getting a lot for it where they're located, and that is often stable financial systems, stable political systems, good infrastructure, good education system. Those things, they cost money, but on the end, that's actually what businesses like. They like the predictability, and that's where they're going. So Dan, I think the question is really, what are you getting for the money you're paying?
It's a fair point. And Dan, can you address this question of what is the tax code for? Because there is this confusing thing. I mean, what is the obligation of a company? To pay as much as it, to hit all the statutory numbers, or to try to find a loophole? I mean, it is 30-something thousand pages for a reason, because there's loopholes. I mean, that's our system.
Well, the problem is because our tax rates are so high, there's tremendous political pressure to both utilize and to create new loopholes. And if we did what we were supposed to do way back in 1986 with genuine tax reform, bring the tax rates all the way down, get rid of all the special preferences, we could have a much better tax system, and a tax system that would even generate money, which Christian likes because Christian wants bigger government. I would prefer that we not only reform taxes, but lowered the rate dramatically and reduce the size of government, because I think we're getting far too much government already. And even if we somehow could get it for free, it's still a big, giant millstone around the neck of the American economy.
Well, at first I thought I'm going to agree with Dan here, but the main thing is we can streamline the tax system, we can simplify the tax system, and possibly lower the statutory tax, corporate tax rate at the same rate. But the main thing here where I disagree with Dan is we have large needs in terms of the infrastructure investments, in terms of healthcare reform, in terms of greening the economy that will require money. And we know that these things will cost money, and to some degree that will ultimately mean we have to raise revenues. And that means also raising revenues on the corporate side to some degree. And in the process, and this is what Obama is trying to do, is level the playing field. We don't want to use government taxpayer dollars, U.S. taxpayer dollars, to ship jobs overseas, and that's ultimately one step in the right direction.
Dan, let me just jump in and ask you a question here, because I want to get some company-specific names here. When we look at the biggest federal tax refunds last year on the corporate level, Citigroup got a $4.6 billion check from the U.S. government. General Electric, parent of my network, $723 million check. Now, these companies, some of them on this list obviously had losses, but when you're going down and looking at the effective tax rate here, some of these numbers are shockingly low. So, Dan, how do you explain to people why a huge company that has hundreds of billions of dollars of revenue is paying a tax rate in some of these cases of 5%?
Well, if you have hundreds of billions of dollars of revenue, but you have hundreds of billions of dollars plus some in costs, and you're losing money, of course you're not going to be paying much to the government. And because companies can do something akin to income averaging, oftentimes that means in years that they lose money, they get a check from the government on some of their past years' tax payments. But ultimately, and this gets to the fundamental disagreement that Christian and I have, how big should government be and how much should it be doing? Under Bush, government exploded from $1.8 trillion to $3.5 trillion. And now Obama, who promised change, is continuing the Bush policy of making government even bigger and bigger. And ultimately, if you keep making government bigger and bigger, you have to grab taxpayers by the neck and squeeze more money out of them.
Dan?
And I think that's the wrong direction.
Dan, Christian, obviously,
the
we're going to have you both
question here is
back.
what you're spending the money for, and not government.
Yes, on a lot of ways.
What you're spending the money on, is that
abolished.
growth enhancing, and where you're going to get the revenues to pay for the things
All
that we
right,
need to have.
thanks to both of you. I appreciate
Thank
it.
you
We had
very
fun
much.
with that.